Hey guys, how's it going? Hope your Sunday's going well for those in the US. I wanted to do a quick video on the GLD and SLV. I've seen some people talk about it, and back in the day, I remember there were these people, some people call them conspiracy theorists, and they're saying that the GLD and SLV don't have the silver and gold that they say they do. And I've always been hesitant in trading that unless it was via options, and I used options with high deltas over 80, and I did that because if I lost the premium, I just lost the premium. For instance, if the GLD and SLV were to go bankrupt, as these conspiracy theorists say, then technically you would lose all of it. With these options, you could, potentially save yourself. And the reason why I want to talk about this is because I was talking to a friend about this, and we always talk about this one trader investor, Avi Gilbert. He has a pretty good track record. His timing may be a little off, but he uses Elliott wave theory, and he's been more right than wrong. And what I would look at is what he thinks about the GLD and SLV. And he believes that these securities, based on his knowledge of accounting, he doesn't think that the GLD has the gold that they say they do. And this guy is not a conspiracy theorist. He's gone after GATA. He's gone after gold bugs. Even though he's bullish on gold and silver, I just find it interesting when a non-conspiracy theorist says this. And that's why I'm still hesitant on putting option trades, whether it's spread trades, bullish or bearish, on the GLD or the SLV. And I'm pretty sure what individuals do is they may sell naked puts in SLV if they think the security is bullish. But here's the issue, in my opinion. If Avi is right, if the conspiracy theories are right, eventually this will go to zero if it doesn't have this amount of gold and silver that it says it does. And if that happens, then, if you sold like 10 naked options in SLV, right, it's $22 a share, or per ETF, whatever you want to call it, and you have like a premium of, or you would collect $1, and say you sold 20 of these, right? So what's 20 times, each contract is about what, $2,200. So if it technically goes to zero, most people aren't pricing this in, then you're up for what, $40,000 at loss for this. Now, the likelihood of this happening tomorrow is basically impossible. But if you're looking maybe a few years down the road, you know how crazy the system is right now, right? Whether you're a Trump supporter or not, we know that it's been crazy the last few years. And, with this election fraud, it's even crazier. And, we've seen even during, Trump's time, the XIV went to zero. To zero. Everyone was shorting volatility up until 2018, early 2018. And then, I had a Seeking Alpha article, and one of the comments said I lost $2 million in the XIV, because volatility went over 100% in one day, and that made the XIV go broke. And it went to like, what, $5 a share or something, and then eventually went to zero, from what I remember. And you want to look at other shenanigans with the CME this year. They allowed oil price to go below zero in one of the months. It was, what, June maybe? Went to negative $40 a barrel. Most people weren't trading that because, it was near delivery time, so you don't want to put yourself in those shoes. You don't want to be caught holding something that you have to deliver or have to be on the other side of the trade. So, I always avoided that when I dealt with futures. But, I have no confidence in the CME, helping customers out in terms of situations like that. That's why I've basically avoided those markets, those commodity markets. What I focus on now is like the miners. I look at what the GDX, it has a bunch of, different miners. The SIL has different miners. I have some particular gold stocks as well. So I know that I'm diversified when I'm dealing with the metals. So long story short, if I'm going to be putting any money in GLD or SLV, the only way that I would do that, and I have done this, I think some came at a loss this year or whatnot, is if I'm buying an option with a high delta, so over 80%. So say the GLD right now is what? It's close to 170. I'll just do it it's easier number-wise. And say that I have a $500 call option deep in the money. So maybe the call is at what, 166? And suppose the GLD were to go bankrupt tomorrow, right? The most that I could lose is $500, the premium on the buy side. And I wouldn't be selling these options, but and yeah, that's it. But if you are selling these put options, you're more vulnerable to these securities going to zero. Technically, you could say that about any stock, any asset with these options. Most of these stocks do. But the likelihood of it is very low. But, I've read more of Nassim Taleb, and he's made millions of dollars on these Six Sigma events that no one's even thinking about. He made a boatload during the 1987 crash. I find him really, really interesting. All of you guys should read him who are interested in options. I just finished listening to his audiobook, The Black Swan. Really, really good. And there are a few others as well. So, just be careful. Be mindful of that. Now, I wouldn't see anything like this happening probably for maybe at least the next few years. Maybe 2024. What I may end up doing is, if I do well in the stock market, I may just buy, like deep out of the money put options in the GLD and SLV closer to expiration. Not every week. And, I may just buy it, pennies on the dollar. And, if this crazy event does happen, if Avi Gilbert is right, then I could make boatloads. But I'm not going to be doing that right now. I'm going to be focusing on small caps, on miners, on sports cards. I'm going to be doing videos on sports cards in the next few days. I think it still presents a great opportunity, specifically for cards that the market hasn't picked up on. But yeah, I'm going to definitely bet against those securities, but not on gold and silver in general. All right, last point I wanted to make. I wanted to discuss volatility. Volatility still hasn't significantly gone lower than where it is right now, while this market continues to crawl steadily higher. And what I've noticed via Helen Meisler, however you pronounce her last name, she said that the equity put call ratio is really low. It's like, what, 0.40? Earlier this week was 0.35. And it just doesn't seem, right and healthy. We need a decent pullback. And, with that decent pullback or correction, I'm going to be, in it for the next few years. I have been investing in trading this year. I felt that we're slightly overvalued. But once we get that good correction, could be as early as a week or so from now. What if they don't extend the debt ceiling, or what if Trump does something out of the ordinary in regards to this election? What if he does what Julius Caesar did and crosses the Rubicon? You know, that's what I'm looking at. I don't know what particular event is going to trigger this volatility, but I'm getting more of a sense that volatility is going to spike up, and then it's time for me to buy. I've been buying right now a lot of sports cards. I've been on the sidelines for particular stocks. I mean, yeah, I could have made money, investing in some of these high flyers, but I just don't feel comfortable as of right now. I feel more comfortable in the collectibles goods industry, as the government's going to give more people in their 30s, like me, more stimulus money so I can blow it on cards. Anyways, let me know what you guys think. Think about the options. Think about the GLD, SLV. Whether you agree, disagree, what you think about volatility, stock market. Let me know. Thanks, guys.